Welcome back. Let's get chatting with the management of Atul Auto. Remember, the company reported its November sales. Total sales up 25% at nearly 2,800 units. Domestic sales up 19%. EV L3 sales fell about 15%, whereas L5 sales tripled from 43 to 151. Jitendra Adhia, who's the President of Finance at Atul Auto, joins us now. Thanks a lot, Mr. Adhia, for joining in. It's a good growth that you've shown year on year, especially as it came, post-festive season as well. But it's still fairly short of what you were targeting at a monthly run rate. I remember you saying that you would reach that 4,000 units per month in this year itself. If I look at this entire year so far, you've done about 2,700, 2,800 units per month on an average. Where do you see this number by the end of this year? And what's your target? Because you did say that this year you will cross last year's 26,000 units.
Very good afternoon to you, and thank you for having me on this show. First of all, yes, the November numbers obviously was expected little better than what we have delivered, but I'm happy that for quarter one we grew by 16%, quarter two was 19% up, and for quarter three, first 2 months, we are up by 25%. I believe that yes, by end of this quarter, fourth quarter, we are likely to reach to the close to our target. Obviously, EV is doing good for us, and we have started penetrating it at a certain location, which is likely to be expanded in quarter four. So with that strategy, I believe that we will be able to definitely deliver good volume. This year, yes, all in all, if we look at the situation till November, we are up by 40%, and if we maintain a little higher rate, we are likely to touch upon, somewhere close to 40,000 this year itself.
Mr. Adhia, good afternoon. Thank you so much for joining in. You've mentioned multiple times in the past that FY25 numbers will be better than FY24. You're already at 60% by the first half of this year, which means if we go by the current growth rate, you will easily surpass your targets. Have you thought about increasing your guidance for FY25 when it comes to top-line growth?
See, I would like to remain a little conservative. Let me deliver first, and we will definitely try to, reach out at pre-COVID level first. That is the first milestone which we would like to achieve. But I am happy and excited that there is a good news from all the front. First is in terms of product composition, we are having almost contribution of EV of around 28-30%, alternate fuel and diesel. That is one thing. Exports, yes, it is also moving in a good direction. We started delivering good numbers, and there are repeat orders from the same geography. Apart from that, in a domestic market, we are now up for expanding our network. I am happy to share with you that till November, we were able to add 40 new dealers in our system. Of course, there were certain, correction at some geographies, but all in all, there are 40 new dealers which are likely to get in terms of business in quarter four.
All right, wonderful. So 40,000 units you will cross this year, and thereafter your target would be closer to 50,000, which was what you did in FY19 as well. I just wanted to understand a little about your EV mix itself, because, if you look at the numbers for the month of November, EV L3 sales fell by about 15% to 526 units, whereas L5, a product for which you very recently got approval, that increased from 43 to 151. So is it because L3 guys are now buying L5? What is the run rate that we should see from both L3 and L5 over the next few months, and perhaps 12 months, if you can give us a longer term view?
L3 is, such a product which is mostly replacing, that pedal cycles, and obviously it has got its own parameters for buyers or end users. L5, yes, that is the perfect product which can definitely replace conventional vehicle. And here, we were a bit stuck for our PM e-drive approval. Now I believe that it is likely to be clear very soon, and we will be able to just, put up that particular vehicle at all the locations or all the dealerships. As of now, we are doing it in a very limited locations. That is number one. About a long term, yes, we have For L5, we have a variety of the products. We have our own battery pack where we can offer single battery as well as dual battery, which can kill range anxiety issue. Apart from the range anxiety, we have multiple variants available for this particular applications, passenger or cargo. And another solution for which we have tied up with Honda, that is a swappable battery solution. So combo of this, I believe that in a long run, definitely we are going to make up in L5 category as well. About L3, yes, it is a market for certain geographies where we are doing good, and we are keep on penetrating at deeper pockets. Numbers I would like to just stay for a while. Maybe in the next introduction, I will be able to give better clarity on the volume.
But what does that do to the overall EV mix, Mr. Adhia? Because you had mentioned in the last time we spoke to you that you intend to get EVs to be a third of your mix by the end of this financial year. Are you on track for that, part one? And part two of my question is related to exports as well, right? By November, your export contribution was around 11%. You plan to take it to 15 to 25. When does that happen as well? If you can share a timeline for that too.
So let us first understand EV currently is contributing around 28% in my sales contribution, very close to 1/3 of overall mix. So with deeper penetration of L3 and L5, very soon we will be able to have that composition with enhanced volume or incremental volume. About export, what I said is in a mid-term, currently as it is contributing 11%, in a 3 years time, we will have a contribution of around 15% from 15 to 20% from exports. Where in whatever geographies we have dispatched the vehicles, we have a and we are quite confident that going forward, whatever we have seeded, that is going to reap up the fruits.
All right, final question then on margins. With the product mix changing, at the same time you seeing higher capacity utilization, what is your outlook on margins this year and the year after when you reach 50,000 units?
You look at my first half result for first 2 quarters, it has improved. Raw material consumption has improved, and definitely since the commodity prices are stable, I expect that it is going to improve going forward. Margin profile for each of the categories more or less same, though obviously diesel contributes on a higher side. But it will keep on improving with the higher scale of volume.
All right, Mr. Adhia, thank you so much for sparing time, joining us to share your views on the road ahead for the company. Wish you good luck for the second half of the year. That was the management of Atul Auto, the stock in a 5% upper circuit as we speak. Time for a short break. On the other side, Manisha Gupta joins in with R.K. Janamani, the senior scientist at the IMD. Stay tuned. Back on the other side.
I've had the privilege of being part of the family, and when I was running Bicom 18 for nearly a decade. So many congratulations to you, first of all. I would like to say on behalf of Fevicol to CNBC as well, I think with all the wonderful work which you guys are doing, your bonds with everyone whom you interact with, Mangalam, personally and of course as a channel, I hope continue to become stronger and stronger.